what we do know is that there was a futures close in the afternoon of Wednesday, and that lifted the local market, which then outperformed Europe. Just your perspective on how the markets are trading at the moment?
Yeah, I think futures closeout was very good. I think perhaps some traders felt that the volumes weren't as high as would have been initially anticipated. I think there was about 4 billion traded for closeout, but just strong performance and strong end there, and currently obviously we'll see a lot of quiet going forward until the end of the year to maybe about mid-January, as a lot of players have gone on holiday, and also that would apply locally as well as globally as we go towards the Christmas period and the New Year period. But so very subdued markets at the moment. We're also at the mercy of international markets with the US data and the European summits there. So we're really at the mercy of them rather than our own local factors driving us.
All right, we'll talk about international forces in a second. Let's talk about financials, which seem a little bit firmer, and it seems to be driven by the big news involving Royal Bafokeng Holdings, RMB Holdings, First Rand. As a new shareholder, what value do you think that Royal Bafokeng will be adding to these companies?
Well, I don't know if it's much of a Royal Bafokeng holding. I think what's Royal Bafokeng's part in there will be just as a BEE partner in the holding with RMH, which is the RMB Holdings. And I think what we've seen there is a splitting really of the company into three components, where you've got the holding company, which is RMB Holdings, and then you've got the banking interest, purely banking, which First Rand as well as RMB. That'll be the new FSR look. And then we've got a new company being created. There's going to be the insurance arm of that company, which would be the Momentum and Metropolitan Investment Company, as well as OUTsurance going into that fold. And so as an investor, to be great, then you can pick and choose what you want to go into. If you want to go into the insurance side, if you want to go into the pure banking side, or if you want to invest in the holding company. So I think the market has received that very well, and it's been very good news and great anticipation, great unlocking of value, I think, for a lot of shareholders there, and then where you'll get almost a clean slate and a clean look as to the banking interest specifically for First Rand.
Okay, let's talk about other news. Capital shopping centres also in the news. Now, we've seen a situation where the Simon Property Group in the United States is making a major bid for about £3 billion, but a major shareholder within the CSE stable is not very happy with that offer. What do you make of these events?
Yeah, I think, they're not very happy. They're thinking there's far more value in CSO, and they want, them for Simon to up the stakes and to actually get a little bit more serious in their offer. I think they've tabled a kind of put up or shut up kind of deal for Simon, so that they can see their seriousness. But they're thinking at £3 billion that is actually too little for the company with the future prospects that the company has. And the whole Trafford deal, I think, they view it as Simon's way of trying to stall or trying to frustrate the efforts in the Trafford deal. So I think not really very well received by the shareholders at this moment. They even delayed the vote on the Trafford acquisition by CSO to January or late January, so just to see how this pans up. And I think Simon needs to really come to the party, say what it is that they want to do with the company, and then they can take it forward and then actually increase their offer from 3 billion to a more reasonable level, according to the shareholders.
Ntombenhle, tell us what's going on in the resources space. We've seen some pullback in gold shares, and again resistance in terms of the gold price past $1,400 an ounce. Why is that?
Yeah, I think, we've seen a major pullback with the downgrades that were happened in Portugal and Spain, a lot of risk aversion coming back into the market. And we've seen maybe the dollar actually strengthen a little bit. And then that has obviously translated into the gold price, where we've seen a pullback there. And, look, I think with the little liquidity that will be left in the market for the remainder of the year because of holidays, we will see the gold price really stabling around about these levels. There's no players to really push it up. And I think that's really what we're seeing. The key resistance level seems to be $1,400 per ounce, and I think that really will be the status quo until the beginning of next year, when perhaps some more momentum will come out. And also, with the risk issues that are happening in the continent at the moment, that will obviously then translate into the gold price, and then next year I think we'll start to see some gains there.
let's talk about the eurozone that you've referred to. Moody's putting out a ratings watch on Spain. They're not particularly sure that the Spanish government has a firm grip on its finances, both at the national level and at the regional, provincial level. Your views?
Yeah, I think, this has been it's a recurring theme throughout throughout the whole year of 2010. Really has been characterized by the issues that we've seen in the eurozone, particularly the pigs, as they like to, the acronym that they like to refer them to. It was Ireland as well as Spain this week that took the spotlight, and the whole contagion effect that people are starting to fear. And the EU summit is underway at the moment, and we'll hear later as to what the powers that be they have to say about it. I don't think the market has got high expectations there. I think what we want to see is that some kind of comfort given to the market, in the sense that the central bank will do something about it, that they won't just let it falter and let it just wither on its own, and that there will be some kind of measures, whether it's buying back of bonds or more quantitative easing measures such as those that have been done in the United States. So I think they're trying to say that they will protect the euro at all costs and do whatever is necessary for that to happen. And that obviously then adds again to the risk aversion, but it brings that back into the market where players are like not happy and not really convinced that any of not just only Spain but any of the affected eurozone members have got the kind of grip that they require for as an investment into those countries.